Hey guys, AKIL'S here. Welcome back to another episode of the Trading Coach Podcast. It's been a while, but I've done another video episode, so if you want to see the handsome face, make sure you head over to Spotify or whatever other podcasting apps allow you to see videos. Today I've got a really cool subject for you. We are going to give you, and by we I mean I don't know why Akil is going to give you, third person, might as well cover all my bases, 10 bits of advice for new traders. And one bonus one, which was very, very interesting. Now, before we hop into the show, been saying this for a while, probably one of the last times I'm going to say it. End of November, Thanksgiving week, we are hosting an online trading workshop. We started promoting it, late October. Tickets sold out right away. We opened up more room. They are now closed again. But I'm having discussions with Jason in the background. I have a feeling that we're going to do one more opening. That way we can let a little bit more people in. So if you haven't registered and secured your spot already, make sure you do so. Make sure you get on the waiting list. That way when those doors do open or when the wait list does expand, whatever it's called, you can get invited in. It's the end of November. It's coming up soon. Head over to www.tier1trading.com. Sign up now. Or be mad when you don't get to experience it. All right, let's hop in. Let's put it this way. Just needed a reason to use it. Maybe I should do a whole podcast like this, make it unique. But let's talk about these bits of advice. So I've been trading for a very long time, right? And sometimes I sound like a broken record because it's funny that over years and years and years of my experience of trading, through my mentor's experience of trading, through my mentor's experience of trading, there have been similar aspects, similar bits of advice that have remained consistent. And it should come as no surprise. I know as human beings, we often like kind of the fun, new, shiny thing. And that's what you see a lot of on the internet, where if you want clicks on videos or likes or whatever it is that people try to get, you need to have something different. You need to have something new. You need to have something shiny. But there's a difference between new, shiny, and exciting versus purposeful and stuff that actually works. And any successful trader will tell you that good trading is boring. And if you follow a handful of principles, it may not be super exciting, but you put yourself in the position to succeed. So what I want to do is I wanted to gather bits of advice from all around the internet, looking at different sources, right? And see if I can find 10 common ones that I think would be good for you. And one really interesting bonus one. It was so interesting that I wish I would have said it myself, but I'm not smart enough to say it that way. So I have someone else say it and I'll explain it. So these are in no particular order, but let's hop in. I'll tell you what they are and I'll expand a little bit on them. Number one, don't look at P&L. Oh man, this is something that has saved my life, right? If you guys have ever been in a live trading room with me, I don't look at P&L. Once I am in a trade, I do not look at it. I only check it when it reaches like a time duration where it needs to be managed or something of that sort. But checking your P&L will cause you to go crazy. I mean, think about it like this, right? What is one of the biggest emotional drivers and triggers out there, right? There are politics. We just had an election. That's one. There is religion, right? Wars have been started over religion. And there is money, right? Money. Money makes us very happy. Money makes us very sad. Money gets us very, like that. Whatever word would be for words I can't say. But you get what I'm saying, right? Money makes us act different. And trading psychology is key, right? In order to be a successful trader, we need to consistently execute our trades in the way that we're supposed to execute them. When I say execute them, it's not just enter the trade, but it's manage the trade and it's exit the trade as well. However, when we're in a trade, right, it's hard enough to get into trade, right? Fingers are jittery and pulses are getting heavy and sweating from the bald head, right? And then we push the trade and we think that it's over. Relief. I did it. I pulled the trigger. Job done. Not so fast, my friends, right? Job is not done. Because now you have another highly stressful state of being in a trade, not knowing the outcome, and watching your P&L go tick, tick, boop, boop. And no matter which way it goes, if it goes down, you get scared. If it goes up, you get scared because you want to take your money out before it's gone. It will drive you crazy. And the longer you watch it, the more likely you are to make a mistake. It's kind of like having an ex-boyfriend or girlfriend or ex-husband or wife, right? Right. Let's say you got out of a bad breakup for whatever reason, and then you go out at night, and then you see your ex-partner with someone new, right? If you leave the scene, you're upset for a little emotional, but you probably get over it, put something on TV, and you're good to go, right? However, if you sit there and stare the whole night in a very creepy way, you're just going to get angrier and angrier and angrier as they cuddle and they kiss and they flirt and they do all the stuff that gets you pissed off. That is the same as watching a trade while you're in a trade. So do not do it. If you're managing a trade, know what you need to manage, when you need to manage. Most likely, it's not until the end of a candle, so you can always come back every 15 minutes, hour, 4-hour day, whatever your duration is. But don't sit there and watch it. You will drive yourself crazy, and you will eventually commit some form of self-sabotage. So I love that bit of advice. I forgot the guy who said it was the old infomercial thing, right? Set it and forget it. Walk away. Get out of here, right? Next. Oh, this was a good one. Tell your wife and kids when you're broke. I think the original comment said something like, at some point as a trader, you will blow everything. And when you blow everything, be honest with your family instead of hiding it from it. Now, I don't believe that every trader will blow everything. That each trader will blow everything at some point. Hopefully you don't. I hopefully by listening to this podcast, you have tips that allow you to avoid blowing account. But the truth is many traders do. There is going to be a point in your trading career where you're bad. Every trader will take losses, so you have that. And this is more, I look at this as not necessarily being truthful with your wife and your kids, which you should be truthful with your wife. You don't want to lie about stuff like that, or your partner, because they are supporting you and they're probably one of the only supportive people you have. So as soon as they catch you in a lie, you no longer have their support and then you're out there with nobody, which is very, very, very hard to do. But I think it's more about being truthful to yourself, right? Losses are part of the deal, right? There are going to be natural losses that are part of your system. That is 100% fine. There are going to be unnatural losses where you do dumb stuff, meaning you sabotage a trade, you make a mistake, maybe you're just bad. All of these are learning experiences, which we're going to kind of get to later, but you need to have acceptance that I am bad, I am losing, I am doing something wrong. Because if you're living in this false reality where you're blaming everyone else, you're never going to do the things that are needed for you to get better, right? This was me in my trading career where I was consistently losing money and I blamed everyone out there but this guy. And I just kept doing it. I kept blaming others and I kept losing money because I never actually locked in on my mistakes and fixed them because it was always someone else's fault. It wasn't until I accepted my own fault that I started looking myself in the mirror, cried a little bit, and then I figured out a plan to correct what I was doing wrong. So this is less about lying to your significant other, but more about acceptance and being honest with yourself. Next up is going to be trade less. We spoke about this on a few podcasts where new traders want to trade more, old traders want to trade less. It's not because we're old and lazy and our reaction time isn't the same. It's because we focus more on quality of trade over quantity of trade. We focus typically less on lower time frames, more on higher time frames because it allows us more freedom of time, which is one of the reasons that many of us get into trading for the first place. But the concept that many newer traders think is that it's the time versus money myth, where it's like the more times I do something, the more money I will make, which is true in a sense. Let's say if you have an edge, it's true. If you have a system that is consistently profitable, and let's say a mechanical system, for example, right? Well, let's say this, right? If you have a system that is consistently profitable, the next step would be, okay, well, how can I execute that system as many times as possible? Then you automate it and then you run it on a supercomputer and it just triggers all the time on as many pairs as possible. That is the maximum optimization of your strategy. Most new traders don't have a successful strategy. Most new traders are the opposite. They are doing something that is causing them to lose money. And now the more times you do something, it feels like you're doing more, but you're actually losing more money because you have a negative edge. So trade less, focus on quality over quantity. Good trades is what we should be shooting for. Next up, risk management over profits. I've said this time and time again. A great trader once told me this. I don't remember who it is, but I know they were great because I was talking to them and I only speak to the greatest of people. They told me, good traders are great risk managers, right? Don't go broke, right? Everyone wins. Not everyone can survive losses. And what good traders do is They have proper risk management tactics that allows them to take advantage and maximize their wins, and then minimize and survive their losses, right? Think about many of you guys listening to the podcast right now. What happens in your trading career? You have these massive win streaks and then you give it all back. And you have these massive win streaks and then you give it all back. The idea is to keep those win streaks, maybe make them a little bit better. But then when you have your drawdown, which every trader will have, because every trader loses, right? Everybody pees, everyone poops, whatever those books we read to our children, right? Instead of giving it all back, you just give a little bit back and then you move on to the next level, and that allows you to create higher highs. So risk management is key. Chip in a chair, don't go broke. You've heard it time and time here on the podcast. If you haven't heard it, make sure you go back and take the 10 episode challenge. Listen to 10 random episodes of the Trading Coach podcast, and I guarantee you'll probably hear it in one of them that you listen to, right? Next up, we're going to say stay up to date with the markets. This is continued education. Just did a podcast on continued education and what I'm doing this winter. Growth mindset is key, not just in trading, anything in life. Markets do change. We need to change as well. Don't need to get into this in too much detail, as we just spoke about it on the previous podcast, but we can never settle. We always have to be curious. We always have to be creative. We always have to look to tweak and analyze and see how can we get a little bit better, right? Kaizen philosophy, 1 degree, right, of change, and that will leave us in a completely different place than where we're currently at over time. After that is going to be, you're going to hate this one because every time a mentor or coach says this, you hate it. But it wasn't from me, I promise. It was from Akil H. Stokes, not L. Stokes. Yeah, right? Take proper education, go slow, find a mentor, right? Properly educate yourself. It baffles me, right? Whatever sound, right? Is that baffle, shock? I don't know. It baffles me to see that traders want to hop into trading, which is an extremely hard thing to do, right? The financial markets, it's like whatever ocean that is in the world, which is like the harshest one that no ships were sailed. What is it? I think it's going around South America or something like that. It's a very harsh ocean. It is extremely hard. It's like professional sports. Only a small percentage of people actually make it. It will eat you up. It will chew you and spit you out, only to feed it to its kids and have them eat you again. That is the financial market. Picture that. Picture it. That's what's going to happen to you. So to have the audacity to think that you can come into something so competitive without any education, I'm just going to walk in and do it, right? And be successful. It's stupid. And that's exactly what I thought. So I'm with you on it. I can say it because I've been through it. But it's stupid. We need to be properly educated, understanding what we're getting into, understanding the best way to put ourselves in a position to be successful. And then after that, we need someone to hold our hand through the process. It's one thing to be trained. It's one thing to kind of be walked through it. It's another thing to just kind of be out there by yourself. So you're going to hate it, but you need to be educated. You can educate in different ways. There are podcasts, like the Trading Coach podcast, perhaps, if you're in that sort of thing. There are videos, there are books, there are lessons. There's all types of stuff. The beauty about kind of this day and age of the internet is you have access to more information than you've ever had before. Gift and a curse, because there's a lot of bad information out there as well. So I guess it kind of balances itself out. But you can get educated, and you could get educated for free, right? That is a thing. Mentorship is key as well, because I'm telling you, all the education in the world doesn't mean anything if you can't practically apply it, if you can't implement it into the market. Because ultimately, as human beings, we're going to make the same mistakes, right? Education can be a double-edged sword as well, where we get cocky because we think we know it all, but we don't, right? The things that you teach in the school aren't exactly how it works in the market. I was speaking to a trader the other day on the platform who was thinking about going back to school to learn economics. And he's like, do you think that would be helpful? And I straight out said no. Right? I took economics in college, macro and micro, and none of the stuff that I was taught actually practically applied to the financial markets, right? In theory, yes, but that's not how it really goes. It's a completely different game, right? So be educated and then have a mentor, someone that can hold your hand and guide you through, not so that you don't make mistakes. You're still going to make mistakes, but so that when you make mistakes, you can learn how to fix those mistakes quicker than if you were just out there on your own. Next one, we're getting down to, I don't know what number we're on, 7, I think. Have other streams of income, right? This is another one. So we're adding on to the things that make you guys mad. People get pissed at me when they see that I have multiple streams of income because that's a bad thing and no successful person does that. Or is it all successful people do that? All wealthy individuals. Isn't that how wealth is created? Multiple streams of income so you can eliminate actual time of working and live off your streams of income. I don't know. I'm new to this thing. I don't know how it works. I'm whatever the internet says is right. But why multiple streams of income is helpful? Because it takes the pressure off. I thought I would be a full-time trader. I thought that I would come into the markets with my small account, make tons of money, and trade full-time. Then I saw what it actually takes to trade full-time, not just the skill needed in the financial markets, but the amount of capital that you need. And I can tell you this, right? If I would have started just trying to trade full-time right away and provide for my lifestyle, meaning survive, and I lived well below my means. My life wasn't very important, but I couldn't imagine the pressure that would have been on me to win each and every day, week, month, right? I dealt with that pressure when I was managing money, and that was horrible, and that's someone else's money. I can imagine like not being able to pay a bill off of it. It is incredible. And when you have that pressure, those wins don't seem like enough because you want to make more to have some security. Those losses seems like they're 10x. Because now you're thinking about what that loss means instead of just, taking a loss, whatever. It's like, oh man, am I going to eat today? Like, it's an incredible amount of pressure, and it just leads us to make more of the mistakes that will just make us worse traders. So if you have multiple streams of income, what it does is it takes some of the pressure off your trading. You can now trade free. You're not trading with thinking about the money, right? Peeking at the P&L in the back of your mind. You're trading the process because it doesn't matter as much because you have other streams of income coming in, right? I always say that one of the reasons I love coaching is because it gave me a security blanket, right? When I went from money management to coaching, right? I didn't want to coach at all. I loved the value and what I achieve out of coaching. But from a trading perspective, it made life easier, right? I was no longer like looking at P&Ls every single week, hoping that I made enough to keep blank amount in my account and made enough to take blank amount out to pay the bills, right? Because I had this income stream from coaching and then my real estate investing business as well, I was able to trade freely where it's like, hey, I don't have to touch this. I can absorb a bad month and still be okay. And that makes a massive difference. So having multiple income streams is important. It also helps you boost your trading account and get to that next level even faster. The power of compounding is amazing. So the more income streams you have, the more you can invest back in yourself. And then boom, that trading account gets bigger, your P&L gets bigger, and everything just gets bigger, right? It's good stuff. Paper trade first. Yep. Paper trade instead of demo trade. Again, another Trading Coach podcast episode on this a few weeks ago. This is what I give you in the Trading Coach podcast, the topics that you need to hear, right? But paper trading is your preseason. It is your chance to kind of iron out, rehearse, get any of the bugs out the way, find little things that you may have overlooked before you have live money at risk. The cool thing about trading is it's one of the only businesses where you don't have to have any live money at risk to get started. I mean, you don't have to get started until you're ready. If you're, we went to a Burger King the other day with my kids and they were doing or a Wendy's, excuse me, not the shame Burger King or Wendy's, but we went to a brand new store the other day and they were kind of doing, they were training the new employees pretty much, but they had to have the store fully open, lights were on, burgers were being made, but they were messing up a lot. And that is, I saw money was just wasted, but they had to go through that trial period of wasting real money to train these employees and kind of get everything figured out. In trading, we can do that without live money. We can run dress rehearsals with paper money. And although we won't necessarily simulate the full emotional responses of winning and losing, we can get as close as possible. So always paper trade or demo trade before going live. Number 8, I think, nothing can replace time in the market. Take affordable losses. Affordable losses they teach more valuable lessons than YouTube channels. I remember this one, right? So experience is the best teacher you can get, right? I think I'm a great teacher. Jason Greystone is a great teacher. My 2 mentors were great, but your own personal experience in the market, whether it's dealing with psychological issues, whether it's dealing with different market cycles, whether it's just observing different trends in technical analysis. If you're doing your work and taking notes and journaling and have that growth mindset of always learning, that is going to be the biggest knowledge base you can have, right? You hear a lot of traders out there talk about intuition, right? What is intuition? Is it this magical spidey sense? Ow, did you hear that? Cracked. Gosh, I'm getting old. Delete that, please. Is it this magical spidey sense that we get in the market where I'm just born with this ability to like find stuff, right? Did I get bit by a bull and a bear at the same time and now I can sense different trends out there? No, intuition is based off things that we have observed, things that we have seen, but we can't quite put a finger on it, right? It's our experience, the experience in the market of witnessing different things. That's what builds our intuition. And that intuition, when we discover what it actually is and make it rules-based, it can help increase our trading edge. I love the part about affordable losses are more valuable than YouTube channels, right? Because losses aren't bad, right? Affordable losses. This goes back to risk management. This goes back to every trader loses. You can learn a lot from wins, but we typically don't take the time to do so. We kind of just be like, oh yeah, I won them, great, woohoo, right? Flex on them. Losses we tend to dive a little bit deeper into because we feel like we did something wrong. Now, just because you lose doesn't mean you did something wrong, but we tend to feel like that. So we dive back in, we analyze it, and we see, oh man, I should have entered there. Oh, I didn't see that structure level there. Oh man, FOMC event today, right? We find those things. So taking those losses in small losses that don't really kill your account at all, obviously, they allow you to have some really, really, really great lessons that will just build on your experience going forward. And that is more important, I would say, than YouTube channels, right? YouTube channels, I guess it depends on what channel you're listening to and how you use it. But I can tell you everything in the world about what you need to do to become a successful trader. And again, I teach traders on a regular basis. I'm talking to a guy right now who I'm telling him stuff and he's going to go out there and do the opposite. So yes, we can tell you stuff, but trust me, it's not going to hit the same unless you experience it yourself, right? And you don't think about any lesson for you parents that you've taught to your kids or that you've experienced in your own life. When we do it ourselves, it hits a little bit different. It hurts a little bit more and we pay attention to a little bit more. And then we go back and be like, man, Dad, you were right the whole time. Like, yeah, that's why I said it, son. Number 10. Oh, self-explanatory, but not everyone agrees. Use a stop loss. Yeah, I'm not gonna, you should probably do so. Why not? I'm waiting. Like, why not? Is your broker out there picking your stop loss and hunting you? No, no one cares about your stop loss. Why not? Why? If you're jumping out of a plane, why not have a second parachute? Just in case the first one doesn't work, just so you won't splat. Just saying. Now, the bonus one, this was cool. And I titled it Think in Probabilities, which I love. And then I saw something else underneath it that articulated it in a way that I thought was simply amazing. Technical analysis is sold as something that can tell you, quote, what the market will do. The deeper you dive, the stronger that message. But it is a fallacy and a trap. Technical analysis can only tell you what the market is likely to do in probabilistic terms. These are similar but drastically different ideas that have the power to channel your mind in two different directions. The former, right, so thinking that technical analysis tells you what the market will do, has to do, must do, leads to false confidence that will have you riding downturns to oblivion. I love that word. The latter gives you a fighting chance against your emotions to make the right decision. So use technical analysis to put the odds in your favor, but be prepared for any and all eventualities. As Mark Douglas, the great late Mark Douglas, said so wisely, when you put on a trade, the only thing you can rationally expect is that something will happen. And oh yeah, wear a helmet because the learning curve is rough and will likely take much longer than you think. I need a microphone so I can drop it. Brilliant. And this is a massive difference. I see so many egotistic traders come into the market and They believe that because they see a certain signal or because they make a certain prediction, the market has to do it. It must do it. The market doesn't give a damn about what you think. It doesn't give a damn about your analysis. The market is going to do whatever it wants to do whenever it wants to do it. Remember that crazy ocean I told you about that I think is underneath South America? Well, imagine getting an untamed horse, bull, and bear, a wild stallion, putting them in the ocean. That is what the market is. It will do whatever the heck it wants to do. It does not care about you. And by having the thought that what I'm doing works in probabilities, meaning that I don't know the outcome of any given trade. This can be the perfect setup in the world, a grade A setup, and it doesn't have to win. It just allows you to accept defeat. And when you can accept defeat, right, it allows you to control your emotions. Because when you go into something thinking like, I'm going to win, I'm going to win, I'm going to win. You know, Everton played Southampton the other day. Everton hasn't lost a match in about 5 games, which is really, 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 really good. Oh, we're going to beat Southampton. I went into the day thinking that was going to happen. I load up my phone after I get off, and I see that Everton lost to Southampton again by 1 point, and I'm pissed off. Gosh. Man, just win a game. Climb the table. Can I not be in a relegation battle for once in my life? Sheesh. But the point is, because I was so banked in on, easy win and we lost, it hurt so much more. Where typically with Everton matches, I'm like, probably going to lose, last minute, maybe a tie for lucky. And then when something happens, I get really excited, even if it's a tie, because it's like, oh, okay, cool, that's cool. So I know it's a wild example and I got a little bit personal there. I'm sorry, it's my podcast, I can do what I want. But the same thing works in trading. When we assume something is going to win and it doesn't, we just get extra mad and that triggers revenge mode. And then we go into revenge trading, we make more mistakes, we use extra risk, we blow even more, and we dig ourselves back into that hole that I told you earlier we are trying to avoid. So those are 10 bits of advice for a new trader plus 1 bonus. Do me a favor, if you have any that you'd like to share, let me know. There's a comment section below here on Spotify. I'm not sure if there's one on Apple Podcasts, but there's one on the YouTube channel as well. But I'd love to hear your feedback. Maybe we'll do round 2, 10 more bits of advice for you guys, whatever you guys want to see. So I appreciate you guys joining the show. Remember, that workshop is coming at the end of November. Sign up now, get on that waiting list, because again, we're going to open up more spots maybe. And if you're not on that waiting list, I don't think you're going to get in. So if you're serious about doing it, you need to get on that waiting list. This isn't one of those things you can sign up for a week before, because we are serious about closing those doors. And continue to support the Trading Coach podcast by hitting that like button, leaving a rating and review. And until next time, plan your trade your plan. I'm going to go grab a drink because now I'm mad about Everton.